turned out to be rather volatile and eventful in the stock market. The inflation data boosted optimism on Wall Street, fueling expectations of a stance reversal by the Fed. Stock indices closed with gains, logging the best week performance since mid-March. A new week has kicked off. It is going to be less busy. Crucial economic reports and announcements are not expected. In addition, the Fed has entered a blackout period before its meeting next week. It means there will be no speeches from Fed members this week. However, traders should be ready for other events. At the end of last week, the earnings season started. The quarterly results published last week turned out to be very optimistic. Investors will analyze the fresh ones in the coming days. One is well aware that financial markets are always full of surprises and interesting events. Watch our video review till the end and leave your comment down below. Let's start. JP Morgan, Wells Fargo and Citigroup revealed upbeat profit results last week. Two of them reported high gains, while the third one disclosed some problems. Citigroup reported a sharp drop in profits. This was not attributed to the woes in the banking sector and markets. Rate hikes and the acquisition of First Republic Bank were the main drivers for JP Morgan's financial growth. This is truly a universal bank that provides services to both corporate clients and individual consumers. Analysts were content with its quarterly results. Wells Fargo significantly multiplied its profit despite an increase in reserves. The CEO noted that while the real estate loans do not pose significant risks, but the future prospects are foggy due to rising rates. Citigroup's profit depends on investment banking services and trading. However, after April, investors became cautious amid the uncertainty around the U.S. government debt. This affected the bank's income from trading operations. Investors are now expecting positive reports from other banks this week, including Bank of America, Morgan Stanley, and Goldman Sachs. Tesla, Netflix and United Airlines are also scheduled to release their profit results. Earnings reports of financial institutions provide up-to-date information about the state of U.S. economy. Speculators are concerned that the Fed's aggressive tightening may trigger a recession. So far, the prospects remain extremely uncertain. The earnings season will be the main driver of risk appetite in the coming sessions. The main question is how high the recession risks are. All three benchmark stock indices rose last week amid a slowdown in inflation. The Dow Jones gained 1.7%. At the start of the new week, it maintained an uptrend. However, the risk appetite weakened due to negative news from China. Disappointing economic reports worsened market sentiment. It will hardly undermine the current rally. Investors are now trying to determine how strong it will be and when to expect a correction. The main risk for the stock market now is the recession fears. Now let's try to figure out why it is so. Markets are bracing for recession, which may begin next year. A downturn will be the most anticipated in U.S. history. However, such forecasts are based more on assumptions than real data. For example, such an important macroeconomic indicator as the labor market indicates a much more favorable situation in the economy. There are no signs that the economy is sliding into a recession. However, if the U.S. economy avoids a recession, inflation may be higher and more stable than investors have expected before. This means that the Fed will have to raise rates in the future. It will have an impact on the yield of Treasury notes, creating pressure on stocks that are considered risk assets. At the same time, growth stocks could climb sharply. A similar situation occurred in 2022 when rising yields on government bonds made stocks less attractive to investors. Growth stocks have been bearing the brunt, while some value stocks had gained luster with traders again. So let's keep a close eye on the market situation and analyze all the factors to make the right investment decisions. The S&P grew by 2.3% over the week. The further rise will hardly be as buoyant as it was last week. The index is likely to climb to 4,750, but not higher. The start of the third quarter was impressive. However, the index is expected to finish the year near the 4,300 level. As for the short-term prospects, the S&P is unlikely to be able to consolidate above 4,500. However, for the first time in 15 months, it has exceeded 4,500. Its growth was bolstered by expectations of a soft landing and returning of inflation to the 2% target. The all-time high for the S&P index is located at 4,796. The index reached this level on January 3, 2022. By mid-October last year, it dropped to an annual low of 3,577. In the second half of this year, there could be a slowdown in economic growth. The S&P will probably be unable to hit its highs of early 2022. Recession fears could become the bearish factor for the quotes. As a result, the S&P will return to 3,800. The NASDAQ advanced by 3.7% over the past week. The indicator has grown 5 times in the last 6 sessions and showed the best performance among other stock indices. Investors will continue to pay attention to earnings reports. Second quarter earnings are projected to decline by 8.1%. According to Refinitiv data, down further than the 5.7% fall expected at the start of the month. Traders will soon study fresh earnings reports. Despite the worsened forecasts, investors still hope to get stronger results. Now the main focus is on Tesla and Apple. Tesla shares gained 3.20% on Monday after the company announced on Saturday that it had built its first Cybertruck after 2 years of delays. Elon Musk previously predicted that the production of the Cybertruck would begin in 2021. The company also released an updated version of the mobile app in the App Store. Elon Musk said that Tesla is going to consider adopting Apple's AirPlay protocol to transfer videos, photos, and music from Apple devices to the speakers and screens of the car. Apple shares rose by 1.73% after Morgan Stanley raised the target price for Apple stock to $220 from $190, citing a bullish outlook on India as an emerging growth driver for the company. That is all for now. Hit the subscribe button and keep your finger on the pulse. See you.